Good morning, everybody. Hey, welcome to Tuesday, April 21st. As yesterday was a precedent-setting day, and we'll talk about that in a moment as oil prices plummet to historic lows. And I hope you'll stay with us through the whole show this morning as we talk about that and what the effects will be and how that could affect our economy going forward. So, hey, join us with Dave Onstead from Light 105.7 in just a moment.
Light FM, that's Shania Twain there. Hello and good morning. I'm so glad you're here today. Time to check in on your money and find out what Wall Street's doing to your IRA and your 401k. I'm also really glad to have Phillip Statler here today from Statler Financial Services because we hit one of those incredibly weird situations at the end of the day, and somebody else to help explain it in shirt sleeve English is kind of nice to have on board as well. Phillip, good morning. How are you?
Good morning, Dave. Hey, sorry about the technical difficulties lightning caused you guys yesterday, but you know, I didn't even have any lightning in my house over the weekend.
No, it was strange. Just to fill everybody, we went yesterday with no internet around here. Half the computers in the building were futzing around and doing weird things. When lightning hits a great big metal roof like we've got here, it sometimes skips across and does just strange things. And we discovered the hard way yesterday morning. The telephone interface that hooks us up ended up going on the fritz, and our engineer was here until 9 o'clock last night fixing the darn thing. So I'm really relieved to hear your voice here. I'm here to tell you.
Well, I'm glad to hear you too, because I couldn't hear music or anything when you and I were talking yesterday.
Yeah, that was on the strange side. I'm here to tell you. Well, the strange that we were talking about in the financial markets was yesterday evening when you looked at the price of oil, and it was on the top of the hour news everywhere. The futures price for May oil deliveries minus $37.60, and I had a whole bunch of people on Facebook saying, oh boy, man, somebody's going to pay me $37 a barrel to take oil off her hands. Step number one, those are futures prices, and yeah, if you could find somebody to pay you $37 to take a barrel of oil off the hands, it'd still probably cost you $60 to buy the contract to give you the right to do that, but even so, that's an historic low, and it's the first time ever the price of oil has gone negative on the futures market.
Well, and the other thing, Dave, people have to realize is you're right. What that means is somebody would have to pay you $130-something or $30-something to buy a barrel of oil. But what they don't tell you is there's no place to store it. So you'd have to rent a barge at $160,000 a day to store your oil. So that's why it dropped so much. And remember, folks, that price that you saw, that is the May contract. So the futures, a lot of like the airlines and transportation industry, they use those futures to purchase out in advance to control their costs so they know what they're paying for stuff. And so that's the May contract that they're talking about. If we talk about spot oil, which is what is actually trading for right this minute, if you said, hey, you know, I got 1 million barrels of oil, what will somebody pay me for it? It's $15.71 a barrel right this minute.
Which is still dirtbag cheap, but it's nothing quite like them paying you $37.
Right. So, but today when we talk about oil prices, we'll actually be talking about the June contract because that's what they've started printing now.
And that was one of the reasons for the wild swing yesterday. Contracts on May expire as of today, so consequently nobody cares anymore what May delivery of oil is because that futures contract is now expired. Folks who come from up in the Midwest, farmers who do row crop business, understand the futures market pretty well. They end up buying these contracts in bundles in order to stabilize the price they get when they harvest their corn or their beans or whatever at the end of the year. For the rest of us that just dabble in it, look at it, and follow the top of the hour news stories, it can really get confusing and occasionally, like it did yesterday, almost amusing to look at, isn't it?
Yeah, it is. And it's befuddling to a lot of people because they don't understand the whole concept. And so it was one of those weird deals. I mean, it was a historic day for us yesterday to watch the negative number, the red ink hit on oil prices.
Absolutely, first time in history. Now, all of that aside, while we giggle about the notion of nobody's going to pay you $37 to buy a barrel of oil, the other side of the fence is, though, that does indicate there, like you said, is zero demand for it right now. And storage is a problem, which kind of indicates virtually all of my big losers on my pre-trading list today are oil companies. And there's no great surprise on that front, because at prices like this, there's no way anybody's going to take any oil out of the oil shale territory up in the Dakotas or the West Texas oil patch, because there's just no way to make any money off of extracting oil.
That's right. So you're seeing the oil industry. It reminds me back in 08 when the oil industry really kind of hit a hard patch again, and we're going to be there again for a while, because this oil is not going to jump overnight. I mean, it's going to take us some time to get back to some normalized oil price.
Absolutely. One of the reasons, you and I always kind of say we're banging our head against a wall cheering for an increase in the price of oil, and that means obviously the gas pump, is one of the pieces I was reading this morning is if oil prices hang in that $20 a barrel range for any great length of time, this one columnist I was reading says he expects to see 533 oil exploration companies in the United States alone declaring bankruptcy before the end of next year if the price of oil doesn't get back up there. So you ever thought you'd find yourself cheering for higher gas prices, huh?
Yeah, and you and I talk about that all the time, that we'd like to see oil somewhere in that 40 to 55, no more than $60 a barrel. And that way the U.S. oil producers can make money and stay in business and create the jobs. We, the consumers, get a decent gas price, and everybody wins. But we're just not there.
Yeah, in the national security interest, if nothing else, when our oil production business shuts down, where are we buying the oil? Oh, gosh, Saudi Arabia, heaven forbid Russia, someplace. As long as we've got the oil prices up in that $40, $45 a range minimum, we're producing enough oil domestically so we're energy independent. And that's been one of the things the administration has been breastfeeding about now for the last few years, that we've been energy independent. Right now, folks, at under $20 a barrel, we ain't independent because we aren't pumping any.
That's right. Yeah, we're having to rely on somebody else's oil coming in. And I think the president's probably made a good move. I heard this morning that he's suggesting that we buy, like, the number was huge, like 700 million gallons or something like that of oil to replenish our oil supply.
Yeah,
our what they keep in case of emergencies.
Yeah, the strategic oil reserve was depleted the last time we had a bump upward in price, and pressure was applied to the administration to release some in an effort to flood the market and get the price back down again.
So, yeah, they need to do the reverse now, right? They need to go buy some to push the price up.
Yep, they do have some tank space there. That's a good idea. The net result of this whole mess was that yesterday there was a little bit of a panic that was driven a good chunk by energy stocks. Dow was down 592 points. That means it was down by almost 2.5%. NASDAQ down by a full percent, down 89, and the Standard & Poor's was down 1.3%, down 51 points yesterday. Outside of the general volatility we got, we had that downward pressure on the oil sector. Add to that the fact that we're in earnings season and a bunch of companies are saying, I'm sorry, we're not giving you any guidance because we don't know what the Sam Hill's going on, right?
Definitely no guidance out there much. And if they did have it, they're pulling it. So let's start with a household name, a reliable company, Coca-Cola. They reported today they beat estimates by 7 cents a share. Revenue was also above what was forecasted. They did say there was some shift in consumer habits due to COVID-19. Imagine that. So they're feeling like this quarter that we're in right now will be materially impacted. They don't know by how much, but they're hoping that the second half of the year they'll be able to rebound from whatever they lose this quarter. They expect like a 25% decline, I think. And
they probably have to do a pretty substantial production shift at the bottler level with that, going from fountain accounts to retail sales account with more people at home this month.
Well, that's probably true too.
Yeah.
And they're not getting hurt bad. They're down about 0.8% right now. So that's a good thing for them. And let's face it, they're a household name. Coca-Cola is not going to go anywhere. We continue to buy Coke all the time.
Mm-hmm.
I had Travelers, the insurance industry. They also beat. I'm sorry, they missed. I'm trying to get the right number in my head here.
I saw they missed on revenue, but I didn't see anything else.
Yeah, they earned $2.62 a share, and they were expected to earn $2.85 a share. So they missed all the way around. They did take an $86 million charge related to the coronavirus. Now, I'm not sure exactly why. It doesn't really say why or what caused that other than the virus. But they are increasing their dividend by 4%. So they're getting, well, everybody's getting knocked down today pretty much because of the futures. But they're down almost 3% this morning.
I would imagine. I mean, it's a morbid thought, but a life insurance company probably does need to do a set aside, given the death toll of the coronavirus, possibilities of larger hits than the appraisers would normally expect.
Well, I guess it could be for the life side of it, but because they're huge in the property and casualty side too.
Yeah.
We had Phillip Morris, tobacco producer. They beat by 8 cents a share. Revenue beat also. They say, hey, let's face it, the COVID-19 is going to have a very limited impact on those guys at this point. And
more people at home and smoking while they're stuck at home.
That's right. And so, but everybody's getting beat up today because the market is falling off rapidly, and they're down 4.7% this morning. I've got a few banks that well, I don't see the bank.
Let's see.
Lockheed Martin. I got Lockheed Martin, which was kind of interesting. They had a pretty good quarter. They beat the estimates substantially. Revenue beat also. And they're one of our winners today. Finally found a winner. Up 1.2%. And then IBM's getting tanked today. They're down 4.8% on a beat. They beat by 4 cents, but revenue missed for them. As we look at where they are today. Let's mention Hertz, because Hertz, I don't know if people know this, but Hertz, their global headquarters is in Naples, and they're laying off 10,000 employees.
And that obviously isn't good news for the employment front in Florida or any place for that matter.
No, and they are truly trying to weigh their options about bankruptcy. I'm not sure they'll make it.
There's a lot of companies that are going to be in danger of that. Interesting that a 1.2% increase for Lockheed Martin is toward the top of my winners list this morning. My losers list is dominated by companies like Occidental Petroleum, Freeport, McMoran, Apache, Schlumberger, all these energy-sensitive stocks, and they're down like 5-6% this morning, which shouldn't be much of a surprise given what we were talking about off the top. Yeah. Setting the table again for the morning, we had a down day yesterday and a substantial one, like we said, driven largely by energy, but not 100%. 45 minutes before we open this morning, Phillip, what are we looking at today?
We are going to continue that train today. We've got the Dow down a little over 2%, 500 points right now. We've got the S&P 500 down 1.7, which is almost $48. And we've got the NASDAQ down 0.9, $81. So everything is heading red. And let me just say, Dave, it's red across the board. Doesn't matter what you're looking at today. So we go to silver down 6.4%, down below 15 is at $14.61 an ounce. We've got gold down 2.3% to $1,670 an ounce. Crude oil. Now, this is a June contract. So it doesn't have anything to do with what you saw in the news yesterday. Down 25% to $15.34 a barrel.
Dirt bag low is the bottom line for that. Looking at foreign markets, no big surprise. Asia down over 2% for the most part at the close early this morning. Europe is following suit on this. German markets are down 3.25% halfway through their day. Great Britain's down by over 2%. So we're thinking red ink pretty much all the way around the globe. Phillip, this is not looking like a pretty time for somebody who didn't make adjustments earlier. How do I end up getting a hold of you to try to fix what I got left on my retirement portfolio if I didn't move in time?
You know, Dave, that's a good question. And give us a call at 863-382-0037. Hey, just schedule a 15-minute phone consultation with us to look at where you are, see how we may be able to plug in and help you. But if you didn't make any changes, like I've been suggesting over the last 3 or 4 weeks, hey, don't wait any longer. Give us a call. Let's do a financial x-ray on your current portfolio to make sure that you don't have too much risk if this thing continues to go down. And then catch us on Facebook at Statler Financial Services. Join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on News Talk 730 a.m.
And lightning allowing, back here again tomorrow morning on Light FM. Thank you, Phillip. I appreciate it.
All right, buddy. You have a great day, and I'll talk to you tomorrow.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, everybody. I want to thank you again for joining us today. I hope that you found at least a little information about oil and how oil works today. But more importantly than that, you know, we're looking at 2 down days now. Is this the next leg down? I don't know. Nobody knows. But let me tell you this. It's vitally important that you know how much risk you have in your portfolio. Please give us a call at 863-382-0037, and let's walk through our financial x-ray. It's painless. Do it right now. Have a great day, and I'll talk to you again tomorrow.